been wrong in its prediction of interest rates. And right now, it's predicting a 90% chance that the Fed will start to lower rates by at least 1/4 of a basis point. That's the first major change. Now, the second one is the July jobs report, which is the most recent one we have on file, and it came in at only 73,000 jobs added. That's not only way lower than expectations, that's the lowest monthly number since the pandemic. And after what we just learned, you kind of have to ask yourself, is 73,000 jobs actually 7,000 jobs later once it's revised? So if we're consistently coming in below the numbers that we need, which is 80 to 100,000 jobs just to stay flat, that means the job market is actually getting smaller. And when that happens, these happen, recessions. And believe it or not, the Fed actually knows this because at their July meeting, there were two Fed governors, Christopher Waller and Michelle Bowman, and they actually disagreed with the majority of the Fed because they wanted a rate cut at that meeting, arguing the labor market was actually showing signs of stress. One of them said that once the expected revisions come in, job growth will be a lot smaller than we think.
Governors Waller and Bowman continuing that tradition of explaining their dissents on the Friday after the meeting. And they're both saying why they wanted or preferred a 1/4 point rate cut.
Which is, as far as we know, was exactly right. And that changes the equation for the Fed. Because remember, the Fed has a dual mandate, meaning they've got two goals: to keep inflation under control and to support maximum employment. So if inflation is cooling, and it is, and now that the labor market is slowing down, then they have more than enough reasons to start lowering interest rates. And Wall Street, the stock market's already betting on it. And that's the CME Fed Watch tool I just showed you, which you can check yourself. Having said all that though, here's what I'm doing and how I'm personally preparing for the market. So the first thing that I noticed is after the news came out, the market went down across the board. And that's because the market did exactly what it always does. After the bad news comes out, they panic, they sell, and then they're like, wait, but what happens after this? The Fed comes in to save the day, right? And they try to front run the Fed and get ahead of it. Now, if the markets are up by the time you're watching this video, that's probably why, and the bad dip might have already happened, and now we're pricing in a recovery. Now, for me personally though, I'm not a reactive investor like that. I try to understand the economy